Alrighty, y'all. So just wanted to come in here and pretty much explain um, how we're going to use the concepts that I already explained. Now we're going to utilize it to pretty much have the whole narrative on the market and to catch pretty much the top of manipulation or the bottom in order for us to catch the whole expansion and um, catch also, the reversals and have the narrative form where the market is going to go. So essentially, as I explained, I'm going to go over this past weeks, right? We're sitting at, the week is going to be from Sunday 27th till and then this week, which is going to be Friday 1 August. So I'm going to go over this price action to show you guys pretty much how the market, how we can utilize the standard deviation and power theory concept to pretty much have a very good grasp on how the market's going to move. Right, so as I said in the video on standard deviation times power 3, I said that we use the 5-minute and the 15-minute to anchor our standard deviation. And obviously it needs to be off of a pair of 3. So we got accumulation, manipulation, distribution, and then we would get accumulation, manipulation, distribution, right? This is, oh shit, oh my gosh, dude, right, you get the point. Let me just move this here. Alright, right, so the distribution, right? So this would be a bearish expansion day, and then this would be a bullish expansion day, right? As I explained on the videos, we would anchor our standard deviation from the lower low of the accumulation to the breaker structure here, and then, obviously go into our reversal zones. Inside our reversal zones, we would need to look for high time frame PD rate that aligned with that high time frame liquidity, and is the exact same with, the bullish example, right? So right here, high time frame PD rate, and then expansion to the upside, right? So knowing this, we utilize this in the market. It's pretty easy to utilize and pretty much happens every single day. Now, so as you can see, market opened right here, and then on Asia at 7:15 p.m. we started accumulating, right? And then you had this little manipulation lag. Now, where would we anchor our standard deviation? We from the lower low to the breaker structure here. You can see it pretty much touched like here, pretty much, yeah, pretty much just like ticked it and then went, as you can see. So ticked our initial reversal zone here, ticked our initial reversal zone. Well, maybe it edged it by a bit, but obviously it ticked it right here. And then obviously we pretty much had the rest of the day was bearish expansion day. Obviously having this huge end block right here at, that was unfilled, so it needed to be filled. Now, as I explained, we we usually just have two standard deviations, right? We're gonna have the accumulation standard deviation, and then we're gonna have the manipulation standard deviation. This second one is going to be more for targets rather than entries, but it can also use pretty much the exact same as this standard deviation right here. So it would go from the higher high of the manipulation to breaker structure. Here I see this breaker structure, or this breaker structure, this right here pretty much all aligns the same. As you can see, it aligned with our PD ray, which was that NWOG, and then obviously we created that SMT here. Here we created this SMT, so bullish SMT right there. Principal reversal zone where the market got capped because of the SMT. So because of the SMT right here, market got capped right there, and as you can see, it bounced a little bit off of it, but then the next day, obviously, we started our, bullish expansion. As you can see, PM started it, and then we pretty much finished it for the next day. Now, what will we do in this case? Since we start the manipulation up, well, in this case, obviously the expansion up after this manipulation, now you will want to anchor it the exact same way. So from the lower low, right, this low had it SMT2, so it will be from the lower low of the SMT. Remember, as I explained on the initial video, the standard deviation, we had the SMT right there. So it would be from the lower low of the SMT to break a structure, broke structure right here, and as you can see, pretty much aligns as said, right? We have -1, -1.5. The accumulation range, we have this, and then we have our -2, -2.5, where the market was ranging right here, but it didn't actually cap. And then we have our max expansion sitting right here. Right. Let's do the max expansion. This color looks nice, I think. This color looks nice. This chart color. All right. So as you can see, our max expansion was sitting right there. Tapped it, and then obviously we would expand to downside a lot of points. You can see ended up expanding. So from here, ended up expanding pretty much almost 300 points, as you can see. And obviously, everything predicted. So as you can see, the low of the day was predicted, the high of the day was predicted, and so on, right? And now, this on day, what will we do? Well, obviously, as you can see here, it accumulated, but it wasn't really a good accumulation because as you can see, it was doing higher highs, higher lows. So it was more of a trendy than accumulation, right? You can see in that a real accumulation, it would be right here, which would be, a higher high, then a lower high, then a lower low, but then a higher high, then a lower low. Then obviously this is considered as an accumulation. Since this accumulation, where the fuck did I go? Oh shit, one to Friday. So since this accumulation is, very big on the 15-minute, and we were so close to that 3.5, you can just go to the 5-minute, and what would we do? We go into the 5-minute, and then lower low of the accumulation would be right here to the break structure, broke structure right there. And what do we have? We have two max expansions aligning previous day and this day. So you can see previous max expansion, boom, max expansion right there, paired up with that max expansion. As you can see, obviously, it was pretty perfect to be honest. Tapped it and then obviously started expanding down. So as you can see, the model in itself and the anchoring of the standard deviations in itself is very, very easy. It is very easy to grasp. It's pretty much just aligning everything. So you can pretty much have the whole like perspective on the market. So obviously we'll grab our standard deviation. It would be, from the high of the manipulation to the previous structure right here. And as you can see, this also predicted the whole days of this before FOMC, because a lot of you were trading in here. But as I said, this was a non-tradable zone. As you can see here, you got this, and obviously, shit, you got this, and obviously, this pretty much predicted price action. It didn't break from this. It didn't go to -2. So inside of here, there was absolutely nothing for us to trade off of. And we were just sitting here. It was just a huge accumulation range. Why? Because we were sitting on -1, -1.5. But then what do we do with this accumulation range? We ended up breaking to the upside right here. I would consider all of this as an accumulation range and this the actual manipulation. As you can see, the actual expansion was to the upside, right? So you got this whole accumulation range. You go here to a high, you break a structure. As you can see, it edged it by a little bit. It always does that. Well, actually, if you go to the 5 minute, you could have prevented that. Going right here to the 5 minute, instead of marking that break of structure, marking this low right here. I don't know. To be honest, it's pretty much the exact same as always. And as you can see, it's aligned with our initial, our previous days, initial reversal zone that aligned with this reversal zone. As you can see, obviously, ended up expanding far, up into, again, all-time highs. So now we could delete this one, and obviously this one, once it works, and once we have the expansion, you can delete both, and then what do we do? The exact same would be from the low to the break of structure of that same, right before the expansion. And then obviously, as you can see, we'll predict pretty much everything as always. So we would go to here, -2. This pretty much got broken because of the NWAG. And then we were expecting that max expansion the next day. As you can see, it didn't quite reach this max expansion, which is kind of shitty. But we did have this clean PO3. So as you can see, accumulation here. So we have the accumulation loads to break a structure right here. I used this one actually. Break a structure, tap the -2, and then we started going down. I didn't really like this top right here because usually when it creates that high below a day, it always has SMT, and we didn't reach into this. I was expecting this because you can see it also aligned with this, and then this max expansion was aligning with this max expansion. So it was kind of gay, but it's alright. We then got a good entry right here, right at New York AM session. So pretty much market, you had this clean PO3 accumulation, manipulation, and then to start that, rally down. And obviously, as you can see, we had this OB here that's, reacted off of this, had this OB here, right there, had this clean OB right there that I have marked up. So let me just, oh my gosh. Oh, alright, we have that clean OB, created an SMT here, created an RV, then obviously I pretty much bounced off of it and then gave the whole day's perspective to downside. Now Friday is a very bad example because the standard deviation, even if you go to the 1 hour, it got railed because we had that little flash crash of the market. So even if you mark it up like this, you can see -2 more or less started reversing, got that accumulation, on the lower time frame, got that pullback, and ended up obviously going to max expansion, and then obviously, going into the depths of hell. But that's pretty much how the model works. I don't think there should be any problems with it, right? Obviously, in these type of cases, when it rails one standard deviation, you don't want to be trading inside of here. You want to be looking for the other ones, right? So, for example, right here, if you're caught up in this accumulation and you see that we're trending up, and then you see this accumulation, we're probably going to manipulate up to that, max expansion right there. So as you can see, it's a pretty simple model. It's pretty easy to understand. It's pretty much just marking the accumulation higher low to the breaker structure and then the manipulation higher low of the breaker structure. And that's pretty much it. You're going to have the whole narrative. Obviously, days like this would have been perfect right here. So this day was pretty much perfect, to be honest. Counting a lot, as you can see, pretty much predicting the whole days, how the whole day is going to move, and -1, -1.5, predicting it, and then obviously going down, and then as we talked about, to the breaker structure right here, and then we had two standard deviations paired up. We had the -2, -2.5, right, and obviously got respected. I think we created an SMT far right here, like maybe with this low. Obviously, as I said, SMT moves the market. So without SMT, we're not going to have any trades. And as you can see, standard deviation, boom, tapped it, went up, standard deviation, obviously this got railed, and then this didn't get tapped. As I said, I didn't really like this high, but this standard deviation did get tapped, so obviously we did have that standard deviation. Accumulation, manipulation, power 3, perfect power 3, SMT, entry, boom, you can see. So pretty much every single week it's the exact same. So you're never gonna have more than 2 standard deviations on your chart. You're gonna have previous day's standard deviation, right? If it aligns, right, and if it's correct. So from the lower low for the expansion, the break of structure, and then obviously the power 3, the daily power 3 manipulation, accumulation, lower, higher, high to the construction. And obviously, as you can see, pretty much every single day it aligns perfectly. So, yep, that's pretty much everything there is to the model. As I said, never trade without any PD arrays, never trade without any SMTs. SMT moves the market, and obviously, if you just trade these zones, you're gonna get fucking railed if there's no real PD array.